Stock markets now ahead of the busy week of tech earnings. Anastasia Amoroso is chief investment strategist at iCapital. It'd be nice and clean to get 10%. Will we?
I don't know if we're going to get there, Joe. And, the reason I say that is because we came into the month of April with a very tough technical backdrop, but we've quickly corrected that. And so what was an overbought conditions for stocks is now shaping up to be an oversold condition for stocks.
That's quick.
Very, very quickly. And, it's interesting. In the beginning of April, you really couldn't find any investors that were bearish on stocks. And now the percent of bears is just about outpacing the percent of bulls. So I do think we got a pretty quick technical correction. And with almost, between $3.5 to $4 trillion of money markets on U.S. households' balance sheets, I think investors will be looking to step in.
I don't know if fundamentals are ever coincident with what actually happens in the stock market, but we've got plenty of reasons to explain 5%, given what's changed in the last 6 weeks in terms of inflation fears, rate cut hopes. I don't even, there's some people saying 2025 now.
Right.
And they say, until we get the first cut. How do we know it's even going to be a cut and not a hike at this? So there's plenty of, does that shift to allow us to make a bottom at only 5%?
Yeah, I'm really glad you bring up the fundamentals because there has been a repricing, specifically in yields, and I actually think that's very constructive. So when I look at yields today, we've moved, almost 100 basis points since the beginning of the year. Not quite, but what that means is that the market is now more in line with the Fed's thinking. The market is more in line with where we're seeing growth, and the market is more in line with inflation expectations. So what I like about the 10-year at these levels is that it's actually trading above the implied fair value by some models. We've now priced in maybe a rate cut, if that. So I think the market is exactly where the Fed wants it to be right now. And so if the 10-year Treasury yield can pause around current levels, that's another reason to say that equity market probably presents good value.
Someone pointed out we're up 30% or so, even after this pullback in the S&P over the past 18 months. Why is bearish sentiment, why was it rekindled so easily with only a 5% pullback? Why aren't people more in love with this market?
Yeah, I think a lot of people were optimistic on the markets because of the rate cuts. That was a big narrative going into the year, but, there's another reason to be optimistic about the equity markets. Even without the rate cuts, you have resilient growth. We get GDP growth for the first quarter this week, and we're looking for about 2.5% increase in the fourth quarter GDP. That's a reason to be optimistic on the market. But for those, previously in the bullish camp, they were looking for rate cuts, and that's why they flipped to the bear.
So bearish sentiment right now is been increased enough to where you think we make a bottom before a further pullback, before another 5%?
I think you always need a catalyst. And for this week in particular, obviously, we got the big tech earnings to look forward to. And I like that the reset that we've had in some of those valuations as well. But the other catalyst I'm looking for is actually this Friday, which is the core PCE number. Yeah. Clearly the last few months of inflation prints, that's what's really stoked the bearish sentiment. But if you look at the core PCE, the big distinction between that print versus the other inflation print is you have a lot less housing exposure. So versus 32% in the core CPI basket, here you have about 15 or 16% exposure. And by the way, last week we've got the new tenant rent index that registered a 0.4% year-over-year increase versus, it was running at 12% a couple of quarters ago. So I actually think the core PC number, if it comes in line with expectations of 0.3 month over month and 2.7 year-over-year, that could be your catalyst, Joe, to kind of say that we have had enough of a correction.
What happens if it's hotter?
Well, then I do think, Becky, that there's more downside to go. And, although I'm encouraged by the pickup in the bearish sentiment, the reason I say investors should be looking to buy this pullback gradually is because you do have a lot of length from systematic investors. So, for example, the commodity trading advisors, they're just about near max long. If you look at hedge funds, they've added a lot of gross and net exposure. So if we do trade down because of a core PC miss, then I think you have more of a technical unwind. So, look, investors still are sitting on those money market funds. And I think a lot of investors have their strategic allocation, but they're underweight equities quite significantly. So we've been waiting for this all year, is for the opportunity to get back to strategic allocation. And I think that's what this pullback is about. You don't need to buy it all here right now, but gradually buying the dip is what I would do here.